Okay, currently I opened two accounts with my bro. One to 1000 leverage, Demo Pro. It's the standard account. We go back to the trading terminals. I have here the two accounts. I already logged in. So I will go to 2013 to April, and I will try to finish in 2014. Okay. So I'm gonna do this in two terminals. Why? I need two terminals to have one that it's the base model, and the second one that is the one that I'm gonna use to keep improving. I'll show you in just a second how this works. But first of all, you open it when you have the terminal, you open the strategy tester with Control R, or you can go to View and click in the strategy tester. Okay, just uncheck everything else and open this one. After that, you will need to go to File, open that folder, and here you need to drop the file or your .exe of your EA, you know. So go to the MQL4 file and then go to experts. Here you can here drop experts or indicators. You can drop source codes or .exe. You can do with both. So once you do that, you close the, well, actually you first, before closing, do two things. First of all, pin the terminal to your dashboard or to your taskbar. That will help you a lot, especially when you use more than one. And when you install them, give them like a numeration, like terminal 1, terminal 2, or roll forex 1, roll forex 2, so you keep control of how many you install. I use different virtual machines, so I'm used to having a lot and then undo everything and do it again. So it's a very common process. After that, you need to go to the tool section. Also, this will help for live trading. Go to options, and here you need to click allow trading, allow these two, and allow these two too. Okay. And just as extra recommendation, go to events and uncheck this option so you don't have all the notifications. Like, they're very annoying, at least for me. Then you click OK, and we go to tools. Here we go to history center, and in this case, I only optimize for Xauusd because it's my the pair that I have more data, you know. So we go to metals, we find Xauusd. You will find it right like this. You can just double click. When you double click, you'll see the time frame. So I usually just click everything every time and go for 15 minutes, and I click download. So it's gonna take a little bit, maybe not. In this case, I already have a lot of data, and I already used this in previous back tests. So maybe for you, it will take a little bit more time. So let me just, in this case, close it, close the terminal also, and let's just open it again. Very standard process. Once here, you click in expert properties. In this case, I'm not showing my expert advisor tab, but works with any EA. I have here some that I managed to test in periods of time, or that I'm testing. So for example, with the MyFX book, I'll show you how it works. You can set the initial amount of the balance. I always test with 100K. So I have a good amount of balance to trade and a good model to lower down or size up in case it's needed. In 100K situations, you can use standard accounts or cent accounts. So with 1K USD, you can access this type of margins. So I think it's very fair to start with 100K. And after that, you have the options for, well, also you have the option to long and short. And actually, I'm testing specifically long, the long model of my long-term strategy in this period. So in this case, I will select long only. This is the MyFX book, EA, not mine. So the process is the same. Just here in inputs, you'll have different things, like not the same like the MyFX book. So in mind, I have my things. So I want a trick based on that, but I'm not here to show off my EA. I'm here to show you this process and what I'm about to do in the charts. So let's go to the trading view. This is the period I'm testing. I'm in the daily chart of Xauusd. And as you can see, here's the bull run that gold pushed in the crisis of 2008. Of course, the dollar was taking a lot of hits and had to, with all the rates and all the mess. I was really young, but I have information and I can see the the mess at that time. And pretty much what I care about here is the bull run and both the retracements. That mainly this one was when we broke 2 times all-time high, and then USA announced that they weren't, well, that there was no issue for them of bankruptcy or anything, and that they were healthy and they could move on. So that was the actually huge drop that pretty much revalued the gold price versus the dollar. And then we had a little bit of range, but with aggressive spikes, kind of also fair after all the issues of 2008. And then we have the 2013 mega unexpected drop on April. It was, I've studied this drop on the fundamental part and with different approaches, but at the end, nothing matters if you were trading that day or in these conditions. You will need to be able to sustain this drop. We have $254 drop in the gold price, so it's a very big candle, big two candles actually daily. It was in 2 days, but we had a very bearish movement today also previous. It was a 4-day move, we could say. So then we had a very good retracement that gives us at least 50% of our average to go out, and then we continue going down. But mainly I want to test this one, and after that I want to test this one, and I want to show you why. Because let me run first of all the first test that I have, or the base model that the one that I'm about to optimize, because it's, we could say, not working. It's blowing, and that means it's fitted for other ranges, but not the general range of gold. So and of course, we're not gonna see nothing right now because it's already trading, but pretty much we are trading. It starts on April. April starts here, this candle. So if we zoom in, a pretty, we could say, volatile move right away. This is the daily. In TradingView, it's hard to go back more than that. I don't pay for the, I don't need it. This is enough to see that that was a very high volatility move, but I'm able to clean it at about here. That's why I have marked 75 as my entry point to the whole move, because I don't have risk management or news filters coded in my EA, so I can backtest it with real conditions, meaning how my strategy will actually work without those things. So then I can add them. So if I am able to survive this type of spikes without needing risk management inputs or news filters, means that I'm doing all the balance and the progressions very good, very smooth. So it can hold. This is a very big spike if we compare it with economic retracement or economic revaluation. It's 393 versus 240, 210 and 240, 254. So there are pretty solid moves to test, especially this one because it's very unexpected. At least here you are able to be first in the counter side of the trend and clean it with the drop. But also if you test here, we will do that later. We test here on the exact point of the spike at 1980, 18 or 21, I think. Yeah, 21. And see if we can hold the, actually it's a little bit less. This type of wicks depend mostly, as you can see, we have here a wick. Those depend mostly on the broker. Some will have it, some won't. That's why it's important to test with your broker tick data. So that's why I use mine. So you can trust them. You cannot trust what you see, at least on TradingView, but you can test what you can model. For example, here, that's what I want to see. Not good at all, but also good. We don't manage to hold this. As you can see, this is my EA with one logic. I use this is as the main logic, but I use 6 side logics to really trade. So this is only the backbone of the strategy. I add the multiplier so I know how many levels I'm opening. And here I'm opening a lot. So I will start working with this model where I'm gonna do some tricks and I'm gonna show you the next set file, see how it's going. So I work with the first mode after the original one that we know that fails. So the first issue, I'm able to clean as much as I can, because as we can see, let me hide this. As we can see, after the initial order that is at 1575, sorry, we have minor spikes. Like, I could clean here, but it's a minor difference. It's a $10 difference. Like, the whole move is still very, very big. So the only thing I can start doing is to adjust the grid of my last orders. Like, I'm not closing, if we open the chart, like I'm closing 1382 as my last order. So this means that, of course, all the lots are unnecessary. This is just for the testing, so I know how the EA is opening the trades and all of that. So this means that I'm getting out of, let me check again, 1385. That means I'm getting out of margin at very, 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 like here. So that means that, okay, two things actually. Means either I don't have margin here to open more trades, that it's possible at this point. This has to be at least 50 lots or a little bit more in total. So it's kind of a lot. So maybe I'm draining not only margin, like I'm already in drawdown. So I'm blowing at 79. So yeah, most likely I'm out of margin. So first thing, I'm gonna start creating a better progression, a better arithmetic progression. Like, people will tell martingale, it's because they don't understand what they're doing. So this is how it works. So what I need to do is to try to get as much as here. Like, I see something here, like I see that possibly here I can get a retracement, but I will first diversify enough my margin, my $100K here. Like, I want to know that I'm not at risk here. Like, I can survive this spike with no news filter, no risk management, not anything. Like, I want to know my money will be safe if this happens all of the sudden, because this strategy is meant to be 100% automatic. Money working for you, you working nothing. Like, this is your robot working your money. Robot needs to hold this. So in this situation, let's try to diversify. And I had this is the first mode, or the first result, we could say. So we can see we already close. So we are closing. I'm closing at 1412 here. I'm not closing the whole move. That will be a little bit more, just because I don't want it to be very generic. Like, if I do the formula to close exactly here and make the code exactly the week or whatever I want, that will be very generic and very fitted for this. So I need to close by percentage by levels. Like that's how I test. I test the whole range, 2000 to 2024, and then I select the best percentage of average and the best progressions and the best levels to close. So it's not fitted for one range only, you know. So the one that I'm closing right now seems a little bit low, but I'm gonna hold it because it's the one that I was using. This model is meant to be running with six-sided logics, not with this. This is the main logic. This is meant to run with no multiplier. But as you can see, the backbone of the strategy is not clean. So that's what I'm doing. I'm cleaning it. I'm making it lighter and to close more efficiently. So as we can see, there's nothing to see here. A lot of drawdown, 200K. When a 100K deposit, we are blowing tremendously. And now we're closing. That's good. So what's going on? Have 50K profit and 100K drawdown. So we're on the limit. Like we're exactly where we can hold the trend, but it's not enough because we know that we have bigger trends, you know. So it's an advance. It's an advance. But let me check something. We have lower lots compared to the original model. That's because we lower the grid in the last orders, and as we can see, we open at 1331 when we were opening at 1382 the last order. That means 1331 more or less, and that's good because, as mentioned, those weeks depend in a lot of situations of the broker also and the feed and the type of providers and all of that. So I think that it's fairly safe to close at 31, and we're closing around here with a very well. It's a 50. Not a very balanced risk, so I need to work with one more. So let's go ahead. Okay, so for the second mode, I'm checking. So my first order, as you can see, we go back to the tester of the one that already passed. I'm opening at at 16,000. If that's correct. Sorry for my English. So it's not 75 as I thought. So I need to control this closing because I'm here, starting here, of course. But I'm there. I'm not as slow as I thought. That's also the reason I'm having a lot of drawdown and all of that. So I need to manage this closing. How? I'm micromanaging. So I will need to, if in MetaTrader you can see it. Here you cannot see very well. That we have all these retracement. I will later work with this one. Let me mark it. I think that here's also a potential retracement to close, but I feel it will be a little bit generic. So I will test it until I test all the cycles and all the years. And for now, this is the one that is not generic, the one that is at 75, because I know it. I have back tested this. It's just things that you know by memory, you know, like my model is not working correctly if I'm not closing here. So as we can see here, I'm closing, but because I'm taking this is a bigger move, 269, unlike the 254. So I mentioned later that $10 wasn't a big difference, but never listen what everyone says first, because it's a big difference. As we can see, this is the model running, and we already closed. So I opened at the same price, the same order, but now I was able to close before at 75. So that's things that you just know when you have already experienced backtesting and live executions, because I know my algo, I know how it trades live, so I know it can close those small gaps. And also because of the data, I know very well the ranges. So as we can see, it's already closing, and it closed better. Like I have a lower lot. I close not as good as this one at 31, but 38 is good because we are getting with profit. We are closing very, very clean. And I'm guessing, yeah, the drawdown is reduced. Like we have a very big gap between the uh, profit, but also between the drawdown. Like reducing drawdown is always good. Like when you're margin trading and with investing models, 100% automatic, like the same rules of risk management doesn't apply like the ones that your mentor or your guru will use with one entry. Like this is different. Here you're trying to model based in data, not in probabilities or in theories or in whatever they want to see. You're modeling economic situations, and you're using an advanced code to understand how it reacts your strategy or your uh, formulas, your statics or statics, whatever. You understand the point. If you don't, you are in the right place. So in this situation, we are modeling a very, very, very aggressive spike or something that no one can really predict. Like it was a very common day, like any day, and in all of the sudden you have all these spikes. Like there's background, there's news and whatever that can potentially trigger this, and some people can benefit from it, but not everyone. And that's the intention, that not everyone has either the access to the information or time to control the EA or the any factors like time or time at least is the most important. Knowledge would be the second one, and also the efficiency to do it, because this can be in minutes. You could be asleep, you could be at work or anything, and the opportunity to close or something, it's already gone. So that's why you need the advanced code to know how this works. So in this situation, we know that we're not closing perfectly, but our margin, in this case, our initial investment is holding. And I want to be very clear with the data. 90% is enough. Like you can go to my website. I will here share it, galileo.com. Of my model. I traded since 2021 with my algo and my strategy in my model. I constantly backtest and optimize with live conditions my backtesting. So, with 90% is enough. I've done this many times. This is just one proof. 90% when you're just trading something simple that doesn't require complicated stuff, it works. Like it's almost the same. It's enough. 90% is enough. Don't complicate things. Don't pay for expensive suits or software. They just want your money. That's it. Because I'm here showing you how real traders do it. It's simple, it's easy, and it's free. Whatever they tell you, ask them for facts. And for me, in my situation, you can go to my webpage. I have my tracking records directly from my broker. I have well, it's not active anymore thanks to MCall5, but I had my tracking record for 113 weeks non-stop. That you can back with the broker statements, plus my daily content that I share profits and withdrawals from my systems. So that's, I think, very solid background to trust. So this is the important thing, that we have the margin control and that we are adjusting. So now two changes that I can just by eye tell is that I need to close like here lower. That's adjusting grid, and also adjust maybe the closing, because I'm closing $3 lower. So maybe if this one could already close bigger, this one maybe even more, because it's at lower risk. I'm opening lower. So I'm having a very random profit percentage, we could say, but it's mainly because we're stressing the algo at max by just dropping it at this point. Like, tell me what EA will survive this drop. Like, I don't see anyone backtesting 2013, or 2011. I do this like nothing. So let's go with the next model. Okay, so this will be the third, I think. Yeah, the third mode. So as we can see, we're closing a little bit more profit, but also we're closing way less drawdown. In this case, I also adjusted everything, like everything. in the main logic or the backbone of the strategy. I opened two less trades, have a better win rate. We are at 50% in the total drop at 33k profit with 37 drawdown. It's very solid. In reality was an realized 20k drawdown, but we go with the max always. So 37% is a little bit, it's high, but it's good. We can see we keep the micro, in this case, closing at 75. So we can just safely say we are there. And we're managing at $244 move. So very solid. And again, we reduce the lots almost half, or half, yeah, almost half. And we are closing good at 31, like the original. Now this was closing at 38. Now we're closing at 31, and I adjusted to close at 140.41. I really don't like this because, so we can see my retracement is something like 31 to here. Let me change the color. And well, this, I don't feel it's a very generic close, because if we compare the retracement to the whole move, that's 45% retracement. Here is the retracement from the original move. So it's not entirely bad, but it's also not, it's not balanced because it's a very big retracement. I'm having a very good progression, but yet I'm not able to get more return compared to the risk. That's the main reason why I use 6 side logics. This is only the one that pretty much it's telling the EA what's happening. This is not the one trading. The lots are actually all the time 0.01 like this. I don't use progressions here, but I'm using them to understand what type of risk I'm handling, or in other situations also to understand how much lots I can open. Like, I bet few manual traders know for a fact how many lots their strategy can open, or how many risk or how many losses they can handle before margin or margin call or whatever. And I'm showing how, and anyone can actually. It's not that I'm also showing off, but whatever. This is the main reason we level up this. So let me try one more time. Okay, this was the fourth mode. As we can see, it's a little bit more balanced because I'm already closing more profit than the risk I'm getting, and also I lowered the risk, reduce the trades to 2. Well, reduce 2 trades, sorry. 5% more win rate. Let's check the trades. We remain with the micro closing. That's very good. And also I reduced again the lots. That's why the 2 less orders are, as we can see, we took out these 2. And we're closing at 38. So there's one more thing that I can do. And also I'm gonna do it so I don't have to close. This one is closing at, let's check. It's closing at 68, so it's a lot. That's more than 45%. That's between 50 and 55% retracement. So it's not bad. It's not bad, especially with gold and bulls or buy side. It's more likely for you to get good pushes to the upside. But in this case, as you can see, it looks generic. So I'm gonna first make it close at least 32, 33, see if I can get it 31, and then close. I like the what we had was there. It's 44, yeah, 41. I like that one at 45%, 40%. It's very standard for me. I like those type of retracement. So let me give the one last try to get to 31 and close around 31 to get the good backbone or skeleton, I call it, of the strategy. Then I take out the the progression or the multiplier, in this case, the martingale, and start adding logics one by one. So I know what is the best balance. As mentioned, there's one opportunity to get out of right here, but maybe I don't need to do it with the backbone of the strategy, because as you can see, 20% drawdown in this spike is very good. It's very balanced, and with the adding of the logics, that only makes that the weight of the profit of the risk reward, it gets better, you know. So I can make it to start, for example, scalpers here and swing positions here to balance the amount of lots, and close here, and then again get the whole move. But I'm getting the half the risk with the lots, because I already exhausted some here, something that my linear logic cannot do. That's why I need to control the whole move or close it at that point. But closing it may sound generic if I test it versus the 20 or 25 years span. So maybe it's better to do it with the side logics or with scalpers or maybe intra positions. That's only something that by doing it, you understand it. So let me just first do this change and we'll see. Okay, so this looks way better. It's now not very balanced, but it's more balanced than the initial model that we had. So now we are closing more profit than the risk taken. And also I managed to close a better cycle here in the micromanage. I added one more level. As you can see, I was closing with 4 orders and I'm closing with 5. But I'm closing the bottom of that micro range. So I expect this is a very, if we got, by the way, if you want to continue with Xauusd, gold trading, algo trading, and forex in general trading, you can follow me in on my social media. I have Twitter and I have also this Instagram handle. I don't know if that's a correct word, but well, I have this one. So let's go back to the charts. So this is the cycle that I'm closing now. I'm closing this week. That's the, you could say, the last order I can trigger. The price is more or less at 40. I'm closing 42. So this might be generic, but doesn't matter because it's, how many? $33 range. So that's very common to have this type of retracements. So it's not that, we could say generic, because it will work also in other ranges. Well, if we walk back to, in this case, to 2011, that it's currently my biggest challenge. It's not my biggest challenge, but it's a very good stress test for any martingale or for any algo trading, because you were going against this trend. I mean, it's economic factors why you wouldn't go against this trend, but as I mentioned, I trade not based in emotions or really economic factors. I trade to make money. So I'm here to handle every type of situation based in data. So we can see even in these situations, we have at least $91 retracements. We have some small ones at 39. This one also, we could say this or this small range. And here we have a lot of spikes. We cannot see it very well because this is the daily candle. So we miss a lot of small range, but that's very important. That's why 90% of tick data it's enough, mainly because you're not trading 1 second charts or delusional 15-second second chart patterns or stuff like that. You're mainly stress testing the strategy and how the code will manage any type of progression in these situations. So let's go back to the 2013 trend. We can see we're able to exhaust some margin here, so we can handle the whole drop. So in this case, I keep closing 31. That it's mainly a good zone to adding spread, slippage, and whatever in all of the brokers to have a good price to close there. And I'm closing at 60, so it's kind of sorry. It's kind of high. It's 55% of the retracement, but I feel it's pretty solid and it will work in any other situation. So as we can see, if we go back again to 2011 or 2020, let's go to 2020 this time. That it was very similar to 2011, another bull trend, and boom, we go back to the revaluation of the price. So every time we have very big 50 retracements at least. So it's very solid at that point to chase the whole retracement. And as we can see, 52% win rate, it's not bad. Remember, this is only the backbone. When I add the side logics that I have 6, that's when it starts trading. Like that's when it starts looking good. This is only the backbone and only small period of time.